Hello and welcome to Earnings Echo. We put together the most important information about Samsara. We are unpacking their Q4 fiscal year 2026 earnings for you today.
Strictly the objective analysis here.
Right, we are figuring out exactly how a company transitions from a high-burn growth story into a structurally profitable AI powerhouse. So let's get straight into the hard facts.
The Q4 print was a massive beat across the board. Revenue hit $444.3 million.
Comfortably crushing the $422 million consensus.
Yeah, that is a 28% year-over-year jump. And on the bottom line, non-GAAP EPS was $0.18.
Blowing past the $1.13 expectation, what about recurring revenue?
Ending ARR reached $1.89 billion, which is up 30% year-over-year.
A clear triple beat on revenue, earnings, and guidance, and the immediate market reaction was explosive. We saw a 19.5% stock surge, pushing the share price to $35.36 on March 6, 2026.
You do not get a near 20% pop just on top-line growth in this environment.
The market demands efficiency right now, so what operational reasons drove that specific margin expansion?
Well, the leverage is structurally sound. Non-GAAP gross margin hit an impressive 78%.
Okay.
Operating margins jumped a full 8 points to 17%, and the adjusted free cash flow margin reached 13%.
Which highlights the absolutely critical milestone for you to note here. Samsara just achieved its second consecutive quarter of GAAP profitability.
Proving their formerly loss-making growth model is efficiently scaling.
They spent heavily to capture market share early, and now that machine is scaling. Deep enterprise penetration has to be driving that efficiency.
Without a doubt. Currently, 85% of total ARR is generated by large customers spending over $25,000 annually.
Showing massive switching costs. Once they integrate the software across multiple departments, you aren't going to rip out sensors from 1,000 trucks to save a few pennies.
Moving to the earnings call, the tone from management was highly optimistic.
Mostly centered around their AI moat, right?
Yes, CEO Sanjeet Biswas highlighted a staggering metric. Samsara now captures 25 trillion data points annually.
We need to contextualize that for you because 25 trillion data points is a massive competitive moat.
It's proprietary data used to train AI models for physical workflows.
Like fleet management and safety. There is minimal comparable competition with this specific depth of industrial data.
And management is leveraging that exact momentum into a very strong fiscal year 27 outlook.
Give us the guidance numbers.
They project full-year revenue of $1.965 to $1.975 billion,
which represents 21 to 22% growth.
right alongside sustained GAAP profitability.
So the core echo for you as an investor today is this. Samsara has successfully transitioned into a profitable AI powerhouse, heavily dominating physical operations data.
They basically took the messy offline world of industrial operations and digitized it at scale.
Leaving you with this provocative thought before we close. As Samsara unleashes smarter autonomous AI agents into these physical workflows, how rapidly will traditional non-discretionary industrial budgets shift entirely to platforms holding this proprietary data?
Legacy industrial players will either adopt these data-driven platforms or get left behind entirely.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prep. Catch you again soon.